Good morning, ladies and gentlemen, and welcome to the 119th Mpc meeting press briefing. We thank the press for honoring our invitation and to thank you also for helping us to inform the Ghanaian people about the bank's monetary policy decisions. This morning's press briefing follows the meetings of the MPC, and this morning the chairman of the committee will speak to us on the decisions of the committee. We're live on Facebook at the Bank of Ghana, the Bank of Ghana website, bog.co.gh, and on YouTube, Bank of Ghana. We're grateful to some of the media houses who are kindly streaming this press briefing live on their media portals. It's time to listen to the chairman. I respectfully invite the chairman of MPC and Governor, Dr. Anis Addison, to deliver his statement.
Good morning, ladies and gentlemen of the media. Good morning. Let me welcome you to the press briefing for the 119th Monetary Policy Committee meetings, which took place this week. At the meetings, the committee deliberated on recent global and domestic macroeconomic developments and assessed the balance of risks to the outlook for inflation and growth. A summary of the assessments and key considerations that informed the committee's decision on the positioning of the monetary policy rate is as follows. Global growth outturn was better than expected in the first quarter of 2024. The stronger than expected growth outturn was driven largely by improvements in the services sector in the euro area, as well as increased consumer spending and policy support in China, which offset the continued weaknesses in the property sector. However, headwinds such as the depleting stocks of accumulated pandemic-era savings, the gradual cooling off of labor markets in advanced economies, and rising uncertainty related to elections in many countries this year may weigh on growth prospects in the second half of 2024. Consequently, the latest IMF World Economic Outlook growth projections remain unchanged at 3.2% for 2024 and 3.3% in 2025. The tight global financing conditions has persisted, underpinned by a cautious approach to rate cuts in advanced countries. The tight monetary policy stance by central banks in advanced economies has broadly led to higher long-term bond yields and triggered exchange rate pressures in emerging markets and developing economies. This has reinforced a cautious approach to policy rate cuts. Notwithstanding the tight policy stance, the strong growth in the first quarter of 2024, coupled with the dovish tone of the U.S. Federal Reserve, has boosted equity markets. Global headline inflation remains on a downward trajectory, although the disinflation process is expected to slow. The decline in headline inflation in several countries observed in the first half of the year was on the back of a sustained tight monetary policy stance by most central banks and broadly anchored inflation expectations. In the outlook, strong nominal wage growth, which may de-anchor inflation expectations in the short term, is expected to pose some risks to the disinflation process. On the domestic front, provisional GDP growth pointed to a strong growth recovery. The latest release by the Ghana Statistical Service showed real GDP growth at 4.7% in the first quarter of 2024, higher than the 3.1% recorded in the same period of 2023. Beyond the first quarter, the bank's high-frequency real sector indicators reflected a pickup in economic activity, evidenced by the updated Real Composite Index of Economic Activity's annual growth of 3.3% in May 2024 compared to a contraction of 3.7% in May 2023. The key drivers of the growth in the CIEA were private sector contributions to SNIT, imports, cement sales, exports, domestic VAT, and tourist arrivals. The latest confidence surveys indicated some softening of consumer and business sentiments. These findings were broadly in line with observed trends in Ghana's Purchasing Managers Index, PMI, which fell below the 50 benchmark to 49.7 in June 2024 from 51.6 in the previous month. Recent price developments suggest a resumption of the disinflation process. In June 2024, headline inflation eased to 22.8% from 23.1% in May and 25% in April. The decline in headline inflation was attributed to deceleration in non-food inflation by 2 percentage points to 21.6% in June. Food inflation, on the other hand, increased by 1.4 percentage points to 24% over the same period. In line with the ease in headline inflation, the bank's main core inflation measure, which excludes energy and utility items from the consumer basket, declined to 22.1% in June 2024 from 22.6% in May. Fiscal operations in the first half of the year were broadly aligned within the set targets. Provisional data on budget execution indicated an overall fiscal deficit on commitment basis of 2% of GDP against the budget target of 2.7% of GDP. The deficit of 21.3 billion Ghana cedis was financed from both domestic and foreign sources. The primary balance recorded a deficit of 2.3 billion Ghana cedis, that is 0.2% of GDP, against the deficit target of 2.4 billion Ghana cedis, or 0.2% of GDP. Growth in broad money supply moderated in the first half of the year. Annual growth in broad money supply, M2+, slowed to 34.2% in June relative to 44.4% in June 2023. The slowdown was reflected in all the components, that is, demand deposits, savings and time deposits, and foreign currency deposits. Reserve money, however, recorded an annual growth of 77.8% in June 2024, compared to 29.2% in June 2023. The growth in reserve money was due to the adjustment in the reserve requirements of banks. Private sector credit extension steadily improved in the first half of the year. In nominal terms, private sector credit grew by 17.6% in June 2024, relative to the 16.1% recorded in the same comparative period of 2023. In real terms, a contraction in CD credit to the private sector moderated at 4.2% compared to a contraction of 18.5% recorded in June 2023. Interest rate trends were broadly mixed at the short end of the market. The 91-day and 182-day Treasury bills rates increased to 24.9% and 26.84% respectively in June 2024, from 21.7% and 24.58% in June 2023. In contrast, rates on the 364-day instrument decreased to 27.83% from 28.6% over the same comparative period. On the interbank market, the weighted average rate increased, underpinned by the tight monetary policy stance and sustained liquidity withdrawals from the market. The rate increased to 28.83% in June 2024 from 26% in June 2023. Over the same period, however, average lending rates of banks declined marginally to 31.1% from 31.15%. The banking sector performance in the first half of the year points to continued recovery from the impact of the domestic debt exchange program. Total banking sector assets grew by 33.3% to 323.1 billion Ghana cedis at the end of June 2024, relative to 21.2% growth at the end of June 2023. Profitability, liquidity, and efficiency indicators all improved over the period. The capital adequacy ratio adjusted for reliefs remained unchanged at 14.3% between June 2023 and June 2024. Without reliefs, the CAR was reported at 10.6% in June 2024, higher than 7.4% recorded in June 2023. Despite improvements in the banking sector's performance, elevated credit risk poses a threat to the sector's recovery process. The industry's NPL ratio was 24.1% in June 2024, up from 18.7% in June 2023. The consistent rebound in profits, adherence to capitalization plans, and enforcement of strict credit underwriting standards will help ensure that the banks remain on the path to full recovery and resilience. Prices of Ghana's major export commodities traded next on the international market. Cocoa price futures bounced back after declining by 19.2% in May 2024 to $9,022.6 per ton, representing 1.1% growth in June 2024. Crude oil prices remained broadly stable in June 2024, with an average price of $83 per barrel. Spot gold prices, however, dropped marginally by 1.1% to close at an average price of $2,325.3 per fine ounce in June 2024. The trade balance improved in the first half of the year, driven by higher exports relative to imports. The trade surplus improved to $1.81 billion in the first half of the year compared to a surplus of $1.6 billion recorded in the corresponding period of 2023. Total exports increased by $1 billion to $9.23 billion, while imports rose by $884.5 million to $7.42 billion. The increase in total exports was largely on the back of strong growth in gold and crude oil exports. In the first half of the year, the value of gold exports increased by 46.4% to $5.04 billion, while earnings from crude oil exports increased to $2 billion from $1.7 billion in the same period last year. In contrast, cocoa exports, both beans and products, declined by 47.4% to $760 million in the first half of 2024, from $1.45 billion in the first half of 2023. Other exports, including non-traditional exports, also declined by 8.7% to $1.5 billion over the same comparative period. Total import bill also increased, driven by both oil and non-oil imports. Oil imports increased by 6.1% to 2.3 billion US dollars, while non-oil imports increased by 17.2% to 5.1 billion US dollars. Consequently, the total import bill rose by 13.5% to 7.42 billion US dollars in the first half of the year. The current and capital accounts improved over the period, supported by higher external inflows and lower outflows. The improved trade surplus alongside higher remittance flows resulted in a higher current account surplus of 1.28 billion US dollars in the first half of the year, compared to a surplus of 863 million US dollars in the same period in 2023. The capital and financial account reduced from a net outflow of 1.04 billion in 2023 to a lower net outflow of 367.5 million US dollars in 2024 due to higher government loan disbursements, reduced amortizations, and significantly lower portfolio outflows. Other capital flows, including private capital, recorded a net outflow of 1.6 billion US dollars from an outflow of 1.1 billion US dollars over the same period in 2023. These developments in the external sector resulted in an improved balance of payments position. The current account surplus, together with the reduced capital outflows, resulted in an overall balance of payment surplus of 942.3 million US dollars in the first half of 2024, compared to a deficit of 341 million US dollars in the same period in 2023. There was a significant build-up in international reserves during the first 6 months of the year. Gross international reserves increased by 947 million US dollars to 6.87 billion US dollars at the end of June 2024, equivalent to 3.1 months of import cover. Net international reserves also increased by 1.31 billion to 4.50 billion US dollars at the end of June 2024. The higher build-up in gross international reserves was aided by the strong performance of the domestic gold purchase program. The Ghana cedi came under pressure in the first half of the year, especially in May 2024, but has since eased. The relative stability on the foreign exchange market in the past few weeks reflects the continued tight monetary policy stance, the implementation of the dynamic cash reserve ratio to mop up excess liquidity in the economy, the revised regulations on advance payments for imports by the bank, and positive sentiments from the third tranche of the IMF extended credit facility and the agreement in principle with external creditors. From the beginning of the year to 19 July 2024, the Ghana cedi depreciated by 19.6% against the US dollar, compared with 22.1% for the same period last year. Summary and outlook. Global economic activity generally surprised on the upside in many countries in the first quarter of 2024. IMF growth estimates for the advanced economies show that growth is expected to remain stable. Growth moderation in the United States is expected to be offset by a modest pickup in the euro area in 2024, driven by stronger momentum in services and higher than expected net exports. For emerging market and developing economies, growth is projected at 4.3% in both 2024 and 2025, driven largely by strong economic activity in Asia. However, persistence in services inflation tied to wage growth could result in central banks keeping rates higher for longer, and weigh on growth prospects. On the domestic scene, GDP growth outturn for the first quarter of 2024 was stronger than expected. Economic activity remained resilient in the context of generally tight policy stance. This is shown by the latest GDP data released by the Ghana Statistical Service and the subsequent upward revision of growth estimates. Similarly, high-frequency indicators of economic activity, which are more recent, suggest stronger growth outcomes. Consumer and business confidence sentiment softened, driven by the rapid exchange rate depreciation observed in May and high food prices in June 2024. As the exchange rate stabilizes and macroeconomic stability takes hold, the reversal of these sentiments will further help support economic activity. Reserve buildup has been strong in the first half of the year. The external payment positions improved in the first half of the year. The current account surplus significantly improved, aided by strong gold exports, robust remittances, and the effect of the debt suspension. This development, along with the domestic gold purchase program, helped accumulate reserves faster than envisaged under the IMF-supported program. With a favorable external position and a strong reserve buildup, the Bank of Ghana is better positioned to provide cushion against external shocks to the economy and thereby provide stability in the foreign exchange market. Fiscal policy implementation so far has been on track and aligned with the program. Staying on the course of fiscal consolidation path for the rest of the year should lock in stability in the overall macroeconomic conditions. On price developments, there is some uncertainty regarding the inflation path for the year, given the recent exchange rate pressures, upward adjustment in utility tariffs, and increases in export fuel prices. The above developments have resulted in a slightly elevated inflation profile for the year. Even though inflation is expected to remain within the target year band, the risks are tilted slightly on the upside. This will require maintaining the strong monetary policy stance, supported by strong fiscal consolidation efforts, including remaining vigilant to ensure that the end-year inflation objectives are achieved. Given these considerations, the committee decided to maintain the policy rate at 29%.
Thank you very much. Press colleagues, you've heard the governor, and so for my colleagues who want clarifications on some of the issues in the statement, I'll give you the opportunity. Respectfully, let's very brief with our preambles, 2 questions per media house. As always, you mention your name and your media house. So for first round, George Rafi, Fuad Nova Reports, Joshua Leteli, and then I'll take a last one for this one. Echo, are you ready for this one? Take it back. Okay, George. Brief. Thank you.
Good morning or good afternoon, Governor. My name is George from Joy FM. Governor, I just want you to help me out in terms of what does the Bank of Ghana describe as relative stability for the local currency? A little bit of education, maybe some monetary policy 101 will help me. Now, a German sells bags in Makola, and she has been following developments in the news. First, we're told that if we get a deal with the IMF, that is the second tranche, we will see the city respond positively. We also heard stories about the fact that if we're able to get an arrangement with the bilateral creditors, that would impact on the local currency. Then we also heard a bit about the Eurobond holders. But still, when you monitor closely development on the market, maybe if I should look at the nominal value, the city is still struggling. And for at your end, what else has to be done for us to see that strong stability on the market when it comes to the nominal value or the local currency going forward? And so for you, that is my first. And the second one is that do you think that you have built enough reserves to deal with the pressures? I remember the last engagement, you sounded some caution going forward. Have you built enough reserves to meet, if for instance today they're able to sign the deal with the Eurobond holders and the first tranche of $500 million and the other payments? Are you in a position to meet all those commitments and also have a sound reserves to address other issues as well?
George, thank you very much. Italy.
Good afternoon. On the back of the issues with the city, my name is Natalie, sorry, from Channel One TV. Natalie from Channel One TV. On the back of the issues with the city, we remember in the last 2 years, the Bank of Ghana had this operation where you clamp down on illegal operators in the foreign exchange market. I want to know what's the situation now with that issue. Have you seen any improvement with them leaving the market? And then secondly, there was an issue with some of the banks closing down personal savings foreign accounts of banks. Has that come to your doorstep, and what are you doing about it?
Okay, Italy, thank you. Nova reports.
Okay, good afternoon, Governor. My name is Dodi Fuad with Nova Report. Dodi Fuad with Nova. Yes, please. Okay, so Governor, I want to know the new cash reserve ratio requirement. I want to know if it has led to more advances to the private sector as opposed to lending to the government via T-bills, and if you know, what are the reinforcement plans and policies the bank is putting in place to get the banks to lend to the private sector more. My second question is, I want to know if the bank has enough reserves to pay the $478 million debt service to Eurobond holders this year, and how likely is that going to impact the city? Thank you.
Okay, sure. Brief.
Good morning, good afternoon, Governor. My name is Joshua. I'm with the Business and Financial Times. My first question possibly has been asked by Fuad, but just to emphasize that, to what extent can we attribute the CRR to the easing in terms of the real lending, the real rates in terms of lending? The second has to do with one of the questions asked by my colleagues from Channel One, which has to do with, to what extent do we see the CRR having an unintended impact with regards to the decision by the banks to possibly close down some of the dollar accounts, since they have to account for that in terms of their deposits? All right, thank you.
Okay, Joshua, thank you. Chairman will take your response. Thank you.
Yes, very interesting set of questions. Starting with George from Joy FM, who wants Economics 101 lesson on what determines the exchange rate. And I thought that everybody in Ghana knows the Economics 101 of exchange rate, that if the fundamentals are not right, everybody in Ghana knows that if the fundamentals.
Governor, I was saying, what does when the Bank of Ghana says the local currency is relatively stable,
Yes.
what do you describe?
But you also asked about the other factors and the issue about Economics 101. So I'm getting there, and this is precisely what I'm saying. That so you have your fundamentals, which play a key role, right, in the stability of the currency, depending on balance of payments, your imports and exports, and your capital flows. All of those factors play a role in getting the exchange rate or in setting the exchange rate. Now, the points that you made about IMF, the arrangement with bilaterals and Eurobonds, all of them have an impact on the exchange rate. But quite apart from that is also the issue of sentiments, right? Expectations, and markets, the way people behave in markets. So in a sense, when Bank of Ghana says we expect relative stability to the exchange rate, we expect the exchange rate to be, within single-digit depreciation. That should be stable in relation to a single-digit inflation objective. At the end of the day, it's inflation differentials which matter between you and your trading partners, right? But we are living in an environment in which, quite apart from the movements in our fundamentals, we also that cocoa, for example, didn't do too well in 2024, nearly 47% decline in our cocoa export receipts. At the same time, we have seen very strong performance on the side of gold, which sort of compensates for that on the export side. And then on the capital account side, we have seen that there are lower debt service payments, right, compared to a year. That should help reduce the pressure on the currency. But in 2024, we also know that this is an election year. So there are a lot of issues about the outlook and uncertainty and speculation, which are becoming more important, in determining, the behavior of market players. So really, these are the factors that come into play when you're looking at explaining the movements in the exchange rate. You're asking the question, what else has to be done? What else can you do about expectations? What else can you do about uncertainty about, the economy, given the fact that we have an election coming up? You tell me. So it's not everything that can easily be, handled. Some of them are very complicated. And then you ask the question whether we have enough reserves to meet the first tranche payments for the bondholders. Yes, I mean, that's part of the IMF program that has been designed, right? When you're designing the IMF program, we're very much aware of payments that are upcoming. If you look at the cash flow projections, the provision has been made for this particular payment. So yes, we have had built up reserves to meet some of these lumpy payments in the outlook. I hope you feel answered, or there are still issues that you don't that you don't find settled.
It has to do with still the fact that can the bit about the sentiments also.
So yes, I mean last year we didn't have that kind of problem, did we? I mean last year the city was relatively stable. 2023, apart from January, the city hardly moved, right? But this year is a special year. And there are so many factors at play. And sentiments are overtaking even some of the fundamentals, the expectations. Those kind of things also matter in the stability of the currency. I'll drop it there. So Berkeley, Berkeley is also coming up with another dimension, what we did last year in terms of the clampdown on the illegal operators. You never really completely get rid of them. They are there. I think after the initial clampdown, the pervasiveness of it probably went down a bit. But it's an ongoing, exercise that has to be repeated from time to time. And I think that effort has been repeated and will be repeated, depending on the assessments of what is going on out there. Now, your other question on banks closing, is that it? Banks closing the foreign exchange accounts. The Association of Bank has come out clearly to say that that is not accurate. I think there was only one bank that had written to its customers about that because in their view, they thought that the issue of uncertainty which we earlier talked about on the outlook, was creating a situation where individuals were beginning to pile up foreign currency savings in their accounts. And therefore, they thought, the best way to discourage that was to, do what they did. But we have spoken to them. They didn't think that it was necessary for them to put out those notices. And I think they have withdrawn those letters to their clients. But again, this is the issue: uncertainty, speculation, and human behavior. How agents respond to environments with uncertainty. All of that, are playing a role in what we are seeing. Forward on reserve requirements leading, this is the same question, right? Whether the reserve requirements are leading to, what was the question?
Rather leading to increasing advances to private sector as opposed to lending to government via T-bill.
Really, the intention for that particular measure was to withdraw as much CD liquidity as possible from the economy. And the data that we have suggests that we have been able to do that. We also know that the credit to the private sector, from what I just read, is beginning to pick up, right? Remember, this economy is emerging from crisis. Non-performing loans are higher. The risks associated with lending are higher. So the banks have been cautious in terms of how much they lend to the private sector. Since the implementation of that policy, we are seeing credit to private sector increase, albeit not by a major amount, right? But I think the more important development is the amount of CD liquidity that the central bank has been able to withdraw from the economy. And really, this was the objective behind that particular policy measure. You also asked about the same banks closing down foreign exchange, whether it's an unintended consequence. I don't know whether you asked that question. No, you asked that question. So maybe this is the time to do it. I don't think, well, the banks will tell you that it is not an unintended consequence of that, right? But I can see where you're coming from, because if the banks feel that they don't want to provide, what do you call it, CD cover for foreign currency deposits, because the more foreign currency deposits that they accumulate, the more CD reserves that they have to place with the central bank. So they have an incentive to do that. But we have engaged them. They have come back clearly to us that they don't have such an objective in mind, and we are going to be watching that area very closely. As I said, it's only one bank that issued letters to its clients. None of the 22 other banks did that. Besides, they have officially come out to clear the air on that issue. Joshua, your first question was also on cash reserve ratio, whether it has led to, I believe, the growth in credit. Is that the question? Whether the cash reserve ratio has led to an increase in real credit growth. As I said, we are seeing that the numbers have gone up, not that significantly, but the intention of the policy measure itself was really to absorb liquidity from the economy more than on the lending side. Fuad, you also asked the same question that I believe George had asked, whether the bank had enough reserves to be able to make these lumpy payments in the second half of the year. And I've already responded to that. Yes, we do, because these are programmed expenditures under the program.
Thank you. Second round, Justice Isaac GH1 Nanoi Echo.
Thank you very much.
Yes, microphone.
Right. Thank you very much, Governor. I'm not sure if this question is becoming a cliche, but some analysts believe that from where we are, it will be good for the central bank to redefine the inflation targeting um, process that will maybe include some support for economic growth organically, such that um, our economy will be able to contain our expenditure in order to forestall some of the, macroeconomic crises that we constantly fall back into after certain cycles. I don't know whether the central bank has given a thought to this suggestion, and then what will be your take on it, sir? Thank you. Oh, Justice Lee Aduboy, Showing Incidents.
Thank you. Isaac.
I'm Isaac Edu. I report for the Finder newspaper. Doc, I think 2 weeks ago, the World Bank launched the CPIA reports, which reports commended central banks in Africa, including Bank of Ghana, for the reforms you are taking and how that has strengthened your independence. I want to know your reaction to that. That's the first question. And then at the same event, one of the panelists complained about the dollarization of the economy. And he went ahead to say that some public officials were complicit in making the dollar the main thing. So what's your response to that?
Isaac, thank you. Nanoi.
Thank you very much. Good afternoon. My name is Nanoya. I work with Asasi Radio. Now, it appears the brouhaha concerning or surrounding your new building is not going away anytime soon. There's even a scheduled protest against you and your board next month, August. Can you address this once and for all? Are you building a residence for yourself, as said out there? And my other question is, as a central bank, as a central government's banker, what advice will you give to the government in going into the elections? Thank you.
Okay, Nanoi, thank you, Rosemary.
Governor, my name is Rosemond Ajeti from GH1 TV. It's been a year since the central bank gave directives to the commercial bank to use the billion van, the armored one. We want an update on it and how many banks have been able to acquire those banks and the rest. What sanctions are you able to them? Thank you.
Okay, thank you. Mr. Moses, Moses.
Yeah. Thank you, Governor. Governor, for the first time, I almost wanted to disagree with your decision. Because the fiscal seem to be heading in the right direction and has been supported by an upward revision of the GDP growth. So some of us were of the view that you would also follow suit with maybe a marginal reduction to at least propel the economy into growth. But you didn't do that. You also agree that there are uncertainties of election and what have you. And you also expect your inflation targets to remain within reach. So how and when are you really going to see the need to do some reduction? Because in the heat of election and uncertainties, I don't see you cutting rates. So that you still want inflation to do 15% and yet you not even reduce the policy rate. Governor, why? My second concern has to do with just one, that of our interest rates. In your statement, you said that interest rates are around 31%, which is arguably the highest on the continent. And then our inflation is also among the highest on the continent. Governor, what is wrong with Ghana that we have such a high interest rate
what can you do, or what have you not done to ensure that at least interest rates drop beyond just your normal work that you do? Are there any other things you could have done so that we don't take this first position of the highest rate in the country? Thank you.
Okay, Mr. Moses, thank you. Chairman will take your response. Thank you.
It's very interesting set of questions. I don't know if I should deal with Moses right away. Remember, we have a monetary policy committee, so the decisions are not only the government's decision. This is a decision of the committee. We were very clear in the last paragraph of the statement that I have just read to you to explain the decision. I would urge you all to go back and read that last paragraph clearly. I don't know if I need to read it for you again.
No, I haven't.
Yeah, so go back and read it and try to understand the basis of the committee's decision. Now, the question of high interest rates and high inflation, this is the problem we have had in this country for a very long time. Since we started our inflation targeting framework, we have seen that inflation has come down, even in recent memory. As recent as 2019, we were in single digits, right?
Right.
So it's not as if Ghana is a country where inflation cannot be driven into single digits. It has been done as recently as 2019. I don't need to remind you of how we lost, anchor in terms of keeping the inflation in single digits and why interest rates have had to rise since then. The story is there. We all know what happened then. Since 2019, the difficulties that the economy has been through, and which led to, the monetary policy rate, which was around 15% or 13% or so. We went as low as 13, 15% or so, and then had to adjust the rate upwards to, in a sense, deal with both domestic and global developments. This is the history. To the extent that inflation went all the way to 54, all the way to 54. And today we are coming down to 22. We must be doing something right if we can bring inflation down all the way from 54 to 22.3, I think, or 22.8.
Yeah.
Right? So I think you need to be patient and allow the program to deliver what the program is designed to deliver. The program is designed to deliver single-digit inflation at the end. And to the extent that we all do what we are required to do, we will get there. So your concern should be whether we are sticking to the policies and programs that have been specified to get us to that landing zone. Right? So I believe this is also related to the earlier question by the gentleman who talked about the CPIA. That CPIA thing from the World Bank was on the basis of the effectiveness of monetary policy in bringing inflation down from 54 to 22. That was what the World Bank was commending the bank for, because the monetary policy had been effective in bringing inflation down from that high level to where we are right now. But then he said that in spite of that, he is concerned about dollarization and the fact that public officials are part of the problem regarding dollarization. I don't think it's only public official. Dollarization is a phenomenon which is also related to economic developments, expectations, and sentiments. There was a time in this country nobody was interested in even advertising in US dollars when the currency was stable. Go back to 2017, 2018, when the CD was very, very stable. People started focusing on the CD. In fact, the forest bureaus did not have business. Some of them started shutting down in this country because the currency was so stable. So let's focus on the important things. If we focus on what the program is trying to deliver, if we focus on bringing stability to the economy, focus on bringing stability to our local domestic currency, individuals will not have an incentive to price in US dollars or hold US dollars. They're only doing so to, in a sense, manage their risk associated with the local currency. So yes, we don't want dollarization. Our laws do not allow dollarization. We are implementing the laws on that. But the laws alone will not do it if the fundamentals are not supporting the currency. So we have to attack it from both ends, work on the fundamentals, make sure that you have a currency that the people have confidence in, make sure you have a currency that people will not lose value over time, and therefore they will not even be interested in, translating all their CD earnings into US dollars to sort of abet loss of value. This is really what dollarization is about. So the discussion really is stability. 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 That's what we should focus on. Now, Nana, this question on your question wasn't even clear. I don't know whether you are talking about headquarters building or because the governor is not going to live in the headquarters. Right. And I think we've explained the issues of the headquarters several times, that this was a decision which was taken way back in 2019 at the time that the central bank was making lots of profits, 1.6 billion annually for 3 years. This was the context in which a decision was taken to address the office needs of the central bank. Obviously, the things changed in 2022, but the decision had already been taken and the project had already started. But however, the appropriate appropriations had been set aside. So there's no issue there with, justifying the issue of the headquarters. Now, this latest thing about a residence, yes, the bank is building a residence. Just like every other organization, the bank has a budget. Every year, we draw up a budget, we identify, every department comes up with their budgetary needs. They go through a budgetary hearing process, and the board subcommittee reviews these budgetary estimates for each department, and it goes to the board for approval. Once the board approves the budget, the departments go ahead to implement their various programs for the year. So included in, I believe, the budget that was done in 2023 or 2022 was this official residence, which was, being built. But that residence is not being built for the governor. It's just an official duty post. The governor already has a residence. And mind you, it's even larger and posher than what they are talking about. So I have no incentive to build anything new. Because where I live now is posher and nicer than what is being done. What other question is there to answer now?
Mission target.
Sorry? Yes, I found that also to be a very interesting question. I'll come back to that. The bullion ban issue, yes, I was looking at the numbers. We have had quite a number of the banks respond positively. I have some data here on the number of bullion vans that had been brought in. I don't know who's going to go through this and get me that number. So it's working. I mean, the measure has been effective. A lot of the banks have brought in so the bank has brought in over 400 ABVs in collaboration with the Ministry of Interior. So that measure, that directive has worked, and the banks have responded to that objective. And then Justice was asking a question about the inflation targeting process and whether it can accommodate something regarding growth and all that. I don't know whether that is to suggest that we don't discuss growth in our inflation decisions, but you saw what I read. Quite a big part of the Mpc press release was on growth and what is happening to growth and our observations about growth. So even though we say that we are inflation targeting and we are focusing on inflation, we also look at what is happening on growth. Almost what the economists call the Taylor type rule, right? Which is to look at the deviations of inflation from target relative to the deviations of growth from target. So both variables are important in the deliberations of the committee. So maybe the research department, when you meet with your next session with the journalists, you can go into a little bit more of this rather technical topic. But certainly, growth is an important aspect of the things that we look at to decide on what to do with the monetary policy rate. What advice do I have to give to the government going into the election? The only advice is to stick to the program targets that we have all agreed on under the IMF program. And you will see that as of half year, the fiscal targets are on track. The primary balance is on track. The broad budget deficit is on track. And we are hoping that it will continue to remain on track till the end of the year. So that's the advice as a banker to the government. That's the kind of advice I will give. Have I answered everything? Okay.
Thank you very much, Mr. Chairman. I think Chairman has covered all the key issues and all the areas. But so with your permission, just two supplementary questions and then we follow up. There's a follow-up. Okay, let's take Ellie and Mark. Just two. George, okay, George, go ahead. Yes, but let me just take them very briefly.
Good afternoon. My name is Maoli. I work with Ghana Web. So in March, you appointed an advisor for Universal Merchant Bank. I want to know what's the update on the recapitalization efforts of UMB, and also last week Friday, I know you closed down in collaboration with the police the one Decknock investment. I wanted to find out what's the update on the investigations being carried out on that deposit taking institution. Thank you.
Okay, Ellie. Thank you, Mark.
This I will find out what still got the this was actually this done. This current scheme when before price by the time victim that's not a situation. We won't find out what the state
Okay, thank you very much. So if you have additional questions, we'll engage after the press release to provide the data and all the other documents. Thank you very much, Chairman.
Oh, my question.
We're ready for response.
So thank you very much for your question on on UNB. I see that you are following very closely what we are doing to even know that we sent an advisor there and all that. I didn't think that people were following that. So the advisor has come back with his reports and we are studying them. I think they have also come up with a capital restoration plan, which the bank is currently evaluating. So the process is ongoing. Yeah. The other financial institutions supervision department. This is the department in the bank that supervises all other financial institutions other than banks and savings and loans and finance houses. I think that we probably have the largest number of staff in that department. They go around, they supervise the forest bureaus, they supervise the microfinance institutions, and they even go into cooperatives and all of these rural banks that are out there. And they also sort of carry out surveillance in the market. So in that surveillance work, I think they got information on the illegal deposit taking activity, right? Which together with the police, they had to go and close it down. And currently the investigations, as you know, are ongoing. So we will get to hear the details, more details in the next week or so. It's too early to be able to give you a full brief on that particular intervention. My friend, the last question that we had, I think he's probably not fully briefed on what the goal for oil program is supposed to do. Your point is that prices at the pump are going up, right? And whether the goal to oil program is working. So the goal for oil program is working. That's the first thing. The central bank has already committed resources to that program. Prices at the pump will change. It doesn't mean that prices at the pump will not change. Prices at the pump will change to the extent that there are changes in crude oil prices on the international market, to the extent that there are changes in the exchange rate, and other factors which go into the price build-up, right? So it's not so much the goal for oil per se, but the factors that go into the determination of petroleum prices at the pump.
Shimon, thank you very much. So, colleagues, if you still have some questions, you can send in towards communications department at bog.co.gh, and we'll provide responses to you. Also, let's respectfully report accurately. Let's collaborate in case you want some information and data. You can always reach us. Thank you very much, Chairman. Members of the MPC, we're grateful to you, some directors also. Thank you very much. For our viewers who joined our live broadcast, let's continue to join. Connect with our social media platforms at the bank's website, bog.co.gh. God will be soon. Good afternoon.